You've spoken a great deal about banks that are too big to fail.
Correct.
Are there any problems? Can you be specific about any banks that are still too big to fail in the US?
Any bank in the top 4 or 5 are clearly too big to fail. There's an effort going on right now among the regulatory institutions to identify systemically important financial institutions. That almost by definition is a group of banks that will be thought of as too big to fail. And the issues around that are that they have an advantage over other banks. Their cost of capital is lower. Their ability from the market's point of view to take on more risk increases because everyone knows they're going to get their money back no matter what they do. And this causes very bad behavior. The incentives are wrong.
So legislation isn't going to work?
Well, the legislation hasn't been, needs to be thought about in terms of the next round, in my opinion, to deal with that. Because right now, the legislation has enhanced supervision, which won't by itself work. Does have some resolution conditions, but they involve making judgments over a weekend rather than a clear rules-based. And therefore, they will, when you go into the crisis, you cannot make those kinds of decisions. There is too much at risk, as we learn over and over again. So they have to be broken up before that is allowed to happen, as was done after the Great Depression, when we in the United States introduced what was called Glass-Steigal, took the high-risk activities that didn't get public protection and moved them into other institutions, good times, well capitalized. And what happened in the U.S., and I suspect globally, was that because these largest institutions in the world, but certainly the largest institution in the United States, were judged to be too big to fail by the market, their leverage, that is the amount of debt they could take on versus the equity they had, went from numbers like 15, 16 to 1 to 30, 35, 40 to 1. And therefore the margin of error was narrowed so significantly that when the bad times hit, there was no cushion. And so we need prospectively to address that and make sure it doesn't happen again. More capital is, I think, important to have. Now, you'll hear arguments that will impede growth, but I suspect that I would prefer a little less solid growth that's dependable than a little bit of
the system
boom
is a little
and bust.
safer and
right.
they're putting more capital
Because
aside for a rainy day.
I don't want to see people unemployed because of financial crisis.